Go on.
What's up, gents?
Can you hear me?
I can hear you fine. Can you hear me?
Yes.
Can you hear me now?
Yeah, I had to pair these headphones with this laptop, and it worked. Luckily,
Sounds good, Matt.
no technical difficulties.
Yeah, it sounds good. How about you, Greg?
Yeah, no, doing good, man. Doing good.
Yeah. It's a sharp,
Beautiful,
sharp
beautiful day in
it's
Illinois.
a sharp-looking shirt you got on there, Greg. What golf place is that from?
Gullen Golf Course. The it's the Muirfield East.
Is this in Scotland?
Mhm.
Oh, cool.
Yeah. Yep. When you're at the top of Gullen, you can see Muirfield.
Right on. Well, everybody, we're just waiting for a couple more people to stream in here. Welcome to This Week in Lumber with Matt Beamer from Hampton Lumber Sales and Greg Riley from Sitka USA. We had a good show last week, guys. Got a lot of good feedback on that. It never ceases to amaze me. Is that a correct term we use?
Yes.
I get calls from
Yes.
people all the freaking time now, or I'm at an event, or like, man, I watch your show every week, or I watch it in my car. And I'm like, thank you. I don't know who you are, but it's really good to meet you.
I like it. Or I watch it in my car.
Yeah. And Matt, you were just down at a big event in Texas, and you said a bunch of people, or event in Texas, and you said a bunch of people approached you and knew you from the show.
Yeah, I had some guys just kind of come up to me and start talking like they knew me. I'm like, do I know you? And then we pieced it all together. It was kind of funny.
We'll have to. I think we're gonna have to put this behind a paywall. And,
yeah, for sure.
But it's pretty cool. I always hear some good feedback. So we got a lot to do. I sent Nick over some links and some stuff. So last week we kind of summed up. There was a little move in the market. I saw pine was up a little bit. Low grade seems to be slightly better. Overall, the market seems to have a little bit more activity. Matt, Greg, does that sound about correct?
Yeah.
Yeah. I told somebody yesterday that based on my activity level, 2 years ago I would have expected based on that the market would have been up like $40 or $50. Instead, it was up like $5, which I look at that as a huge positive. And I was, I know we got like a bunch of stats to get into, but and Matt's talked about this several times over the last few shows, that we're getting back to much more normalized markets. The craziness of, guys selling some wood and, raising their prices $20, $30, $40 in a day or two. People aren't doing that now. They're very comfortable to continue to, build order file when people want to buy from them, so that they can kind of, sit back and wait for the next round.
I mean, I can kind of divide that into a subgroup that what you just said there. I think that that's true, especially on rail car business. I do think that on the truck business, and you probably see this a little bit more because of your truck business, Greg, that when the bite's on, you definitely can raise your price $20, right? I mean, and you'll probably get it because people are just reacting to a sudden surge of demand or a lack of their rail cars coming in a timely manner. So they'll just pay the extra $20 and move on down the road. But the rail car business, we've seen this at Hampton. If you try to raise your price $20 because you sold 10 cars of studs that day, it's going to be crickets the next day, right? So because there's plenty of other mills out there willing to sell it for $5 more or $10 more rather than $20 more. And there's enough studs to go around. That's the difference. So like on the rail business is one hand, and then the truck business, I kind of differentiate the two right now. I actually think the truck business is probably going to be a little bit more interesting as we go through the year, just because so many of our customers don't want to spend money on inventory. It just costs a lot more money to carry that inventory. and that's not where they want to park their dollars.
Well, and it's also, Matt, to your point, when you talk about like market risk, you buy a rail car today to ship in 2 weeks, you're not going to see that lumber for 5, 6, 7 weeks versus guys that buy trucks from you and I. A lot of them expect them in a week or two, and then ask you where they are in 2 days
or tomorrow.
And Greg, I shared this with
I got orders on Friday, and yesterday afternoon I was going, "Hey, do you know when those trucks are delivering?" And of course, this morning I said, "Well, yeah, this one loaded yesterday, this one's today. These are tomorrow."
Yeah, that's the fun part of our job.
Exactly.
It's interesting, Greg. I think I shared this with you. We had a person watch our show last week and called in and said, one of the things the big retail yards have gotten more accustomed to in the last 2 years. It used to be they were doing quarterly locks with a 30-day kicker on it, right? So you would have to buy, in theory, some of your inventory for 90 to 120 days, right? Nobody has gone back to that. It's all now 30-day locks with maybe a 30-day kicker. So it's 60 days. So when things slow down a little bit, people carry less inventory, right? They speculate on less inventory. And nobody's gone back to asking for 90-day locks or getting 90-day locks. There must be this agreement among all these big retailers not to go back to 90-day locks, or they just don't want to manage the risk. Because had a good person tell me the other day, guess what? Managing risk is expensive.
Yeah, well, and I mean, I think part of that is on the builder side, they're still not sure what the future is going to look like. I mean, I guess the place where there still is a lot of desire and need for price lock is on the multifamily business, which, as we saw the last housing start number, is a bigger percentage of total starts. Somebody asked me today, and I said, well, what's that look like? I go, I mean, I've got a fair amount of stuff that's come up in the last week, asking for like April, May, June start. But I've had a lot of inquiry for pricing July, August, September, which is encouraging, because I wasn't sure what the second half was going to look like. But seeing all that inquiry, and it typically starts with get the pricing out, what you think what the prices are for that, and then over the next 30 to 60 days, that'll get locked in.
One other little note I have on here, they said historically, April is better than March by like a pretty decent percentage, and so a lot of people were buying in March in anticipation of April being better. I don't know if this is this particular one, but does that sound right, Greg? You're usually pretty good on that monthly stuff.
I mean, people use more lumber in April than they do in January and February because of how long the days are. And it's the whole thing behind the seasonal adjustment of the numbers. If you build the same houses in April that you did in January or February, housing starts are down 20%.
Sure.
That's a great,
on a seasonally adjusted basis.
That's a great point. The other little note I have, a little asterisk here. The guy said this was great information. He goes, because we're carrying less inventory because we only have 30 days, we're also in the market buying a lot more than we used to be, right? So so there's more I should say there's less buy your 90 days and then wait for 90 days, and then there's a big run up and all. There's been a good slow and steady outtake of lumber that it seems like, and maybe this is what's one of the reasons, because people are carrying less inventory and got to keep it flowing in and out more. Let's jump over.
Can we transition over to because what Greg just said sort of leads right into this existing home thing.
Yeah, so let's go over to the existing home. I brought up a little. I've got two things. One, the NAR Realtors survey.
Well, there's a clear picture.
There we go. Yeah.
There we go. So I wanted to show this first because it said existing home sales jumped 14.5%. I think that's to a seasonally adjusted annual rate of 4.58 million units, snapping the 12-month slide. So let's click over to the next link, which actually shows the St. Louis Fed chart, and maybe we can talk about it around that. That'll help this conversation along a little bit better.
Well, I have a question about that because in Portland, I've got a report here from my realtor buddy I get every month, and existing home sales are down like 30%. And part of it is the inventory's dropped quite a bit.
Year over year.
Yeah,
Year
a
over
lot
year.
of people are not listing their homes in Portland. Listings are down 30% also. And available inventory in Portland is 1.9 months. So, what I read into that was that maybe that opens the door for more new home starts in the Portland metro area if you could find land, right? There's a development going up right behind my house here about a half mile away, but that's the only one I see locally. But I mean, so where's the existing home sales bump? Where's this bump coming from? Is it coming from the southern states or is it coming from the East Coast? It's not coming from Oregon.
Yeah, Mike Smith just put up here, can't use the same graphs from the last 30 years. Based on less severe winters, we build and sell more homes in northern Illinois, northern Indiana. We build and sell more homes in northern Indiana, Southwest Michigan market than ever before. I'm not sure what he means by that, but
So Matt, to your question is existing homes on the report, Northeast was up 4%. Midwest was up 13.5%. South was up 15.9%. And the West was up actually 19.4%. But, that may be Arizona, Nevada.
Are they comparing the existing home sales in February over January or February of 23 to 22?
No, that's correct.
Okay.
Yeah,
that's my fault then, because my realtor is sending me data compared to last year. So I'm completely wrong here. Sorry about that.
Last year, sales were down 22.5% from last year.
Right.
And you can see from the graph.
Okay.
It just highlights the fact they've been down for 12 months straight.
Got it. That's right. That's where I screwed up. I apologize.
But your point about the inventory is an important one, is because, although Ashley, how many of the existing homes are for sale?
All of them.
That's right. They're all for sale at some
except for.
But the point is that the price was down also last month, right? Prices are lower than they were a year ago on the existing homes that were sold.
Right.
So, which we've been talking about is that's one of the things that has to happen. Prices have to come back, particularly with higher interest rates. I did look, and new home sales were up both in December and in January. I looked at what the forecast. They come out tomorrow from January.
Let's bring that chart up let's bring that little news article up on new home sales coming in.
Go ahead.
One of the things that I always look at with new home sales and is what's the 3-month trailing average, because the standard deviation on the new home sales number, it's like plus or minus 20%. So on a month-to-month basis, it means nothing because they revise the prior months on a rolling basis. So when you look at the 3-month change, that's what ends up being much more significant. So I caution our viewers when they see that number to look for what the 3-month rolling average number is, because that's much more important.
And this was from last month, not the one coming out, just so everybody knows.
Right.
Last month it jumped 7.2 new home sales, and South increased 17.1% to a highest level. Now I have to get my head wrapped around this percentage wise. When you've gone down to a very low number and numbers move, the percentages move a lot quicker, right? So if you're building 100 of something and you build one more, it's obviously the percentage is a lot less than if you're only building 10 of something and you build one more. So when you get down to lower levels, percentages can be a little tricky, right?
Hey, a little caveat to your guys' statement of actual fact, which is how many homes are for sale, all of them, which we love to joke about on this show, which I think is great. But there's a small little sub particle of that one, which is, why would you exchange a 2.7% 30-year mortgage for a 7.5% 30-year mortgage if you didn't have to? So I think one of the problems that the existing home sales that we're going to see in this country going forward is, I mean, one of the reasons why Home Depot, Lowe's, Menards business is up so much is people are reinvesting in their existing home because they have such a great financial term borrowed against it, right? But then the other side of that is that what's left out there, available inventory, is sort of the clunkers, right? I mean, talked to a realtor buddy of mine here in Portland the other day, and he said, you know, what's going on is basically all the homes that are for sale in Portland that are existing homes are just the ones that didn't sell. And so market lead time is now 71 days instead of 29 days, right?
Right.
So
the
it's
stuff that's
old
on the
inventory.
market,
Yeah.
Stuff's on the market. It's the same stuff. Anything good that comes up and it's priced right gets sold.
Exactly.
But the same stuff just keeps hanging around. Yeah. Yep.
Yeah.
Go ahead.
I was going to say, I was going to flip over to mortgage applications while we're talking about this new home sale. So go ahead, Greg.
I mean, I think when I look at all of the housing data that we've had for the last several months, I look at it and I say, wow, okay, you know, this isn't 2008. We're not in any housing crash. I mean, there is the market for housing is undersupplied. Prices got carried away. They need to adjust, but we're stabilizing at what is a healthy, sustainable level. So that's kind of my positive backdrop on housing.
What do you think the Fed's going to do with the next rate increase or not?
You know, I was going to say the negative. Let's talk about all the negatives. I mean, you know, I call it the Powell, Yellen, Biden fiasco. You know, this thought that the Fed is knows anything about what they're doing. They're so lost right now. It's beyond belief. And the challenge is that, you know, the people that are in charge are the people that got us to a bad place. And they're not the people that fix things. People that screw things up and expect them to fix it, that doesn't happen. We need there was a great editorial in the Wall Street a couple days ago, but we need an economic regime change in this country to get us back on track. So, because the one that's running now, you know, I mean, is absolutely insane. And you know,
I mean,
Silicon Valley Bank and First Republic Bank, you know, busting. You know, unfortunately, I think, you know, there's more bad stuff is going to come out because, you know, they're just canaries in the coal mine.
So how do you? So if they're, I'm a big believer that smart people generally show up to fix problems at some point, right? At some point, let's just say, what if there was a whole bunch of people that were going to fix it? What do you do? Because you've printed so many trillions of dollars over 2 years, and then tried to raise rates to fix it. So this whole problem is obviously a rates problem. And then you've got everybody on Twitter saying, you know, everybody on Twitter and startups saying that you need to lower rates today. I mean,
yeah, there's a big disconnect between the businessman entrepreneur and the wider public talking about dropping rates or just going to zero and not raising anymore, versus what the government's actual stated policy has been the last year plus, right? First, they were slow to react to inflation. And we joked about it a year ago, talked about transitory inflation, all that stuff. But, you know, hey, we were seeing it in our daily lives. You go to the store and buy 2 bags of groceries, it's $100 instead of 70. You know, I mean, it just, things cost more now.
Do you mean it's not transitory? It's not transitory.
No, and you know what, though? The decision is going to come down to, is the Fed and the Biden administration willing to just live with higher rates of inflation than what they wanted to target in exchange for maybe a little bit more bank stability and a little bit more consumer confidence, right? And you know, that would lead them to have to either flatten rates out or lower rates again to react to what's been happening here which could end up being good for our industry. But I mean, I'm more concerned about the wider economy at this point than I am about just the housing sector of it. I mean, there's a lot of unknown variables right now and a lot of things that are happening that I haven't seen since I was a kid, back in the 70s.
I mean,
So
Greg, if they painted,
Here's the thing about
are we
this.
painted into a corner here? I mean, is the fact that
We are.
sometimes we have to just take our medicine and deal with
Yeah.
the under? I mean, to me in life, it seems like that's the deal. You've got to take your medicine at some point and just deal with it, and instead of kicking it down the road.
Yeah, I mean, here's the deal: increasing the rates and slowing growth of money supply started a year ago. It's a 12-month lag. We're just beginning to feel the effects of what is an unprecedented, historic increase in interest rates. So, no, does the Fed need to raise rates today? Absolutely not. No, they should come out and they say, "Hey, we've done enough for right now. We're going to let things settle down." But here's what we should do. I mean, the insanity that I have right now is part of the problem is a spending problem. The government spending too much money. And when Powell wanted to get renominated, he was all in with like both of the last two big spending blowouts.
Yeah.
We should, the talk about the debt ceiling. This is a great opportunity. Instead of saying, "Oh, we should just raise the debt ceiling," no. We should stop spending as much. The federal government should stop spending as much money as it does. That's part of solving the problem. The first rule of holes is to stop digging. So let's stop raising rates. Let's stop spending as much money. Will that cause economic pain? Yes, it will. But to Ashley's point, that's the only way we're going to stop the cycle that we're in.
Yeah,
that's not very politically popular, though. You know what I mean? That doesn't garner a lot of votes. That's the bigger problem.
Let's go back. So mortgage applications rise for third straight week after all this stuff we're talking about here with our banking crisis going on right now. Can we call it a crisis? Maybe it's a confidence crisis. I don't know if it's really a crisis, right?
I mean, it's not completely a crisis. It's a warning. It's definitely a shot across the bow.
Okay, so I saw something cool the other day, a stat, and I'm going to throw. So these local banks lend a lot of money to multifamily, single family construction. My biggest fear is we socialize banks and we lose all these small banks, and that scares me. And I think we need these small banks. So what's going to happen for all the people that are on this platform? What should they be looking out for lumber prices, for housing, with all this uncertainty we're going through right now, right?
I mean, it doesn't really help us if uncertainty isn't good for economic activity, because people just stop spending money at that point. They just start saving.
Is lumber going to climb the wall of worry?
Ashley, is that there's some positive underlying trends which will be supportive to the housing industry. There is a demand. People need a place to live.
Right.
If things stabilize at all, then quote unquote, it'll be okay. That having been said, my forecast for lumber prices I put out on LinkedIn, got some interesting comments back, was, hey, look for a market that trades between the 350s and the low 300s and the low 500s for an extended period of time. And and through that process, supply and demand will get closer to equilibrium.
You also have
we'll see where we are.
You also have the head of the NAHB was on Business News the other day talking about how they're really projecting a much better second half for new home construction.
Doesn't he kind of have to say that?
I guess so, but
no disrespect, but he's a cheerleader.
If you think about what we are just now talking about the last 25 minutes, there's doors opening for new home builders, right? I mean, if you don't want to, if I don't want to sell this house, I've got a 2.875 mortgage. I have no reason to move unless I move to another state. But there's millions of people like me out there that bought a house in the last 3 or 4 years, have really good terms.
biggest,
have no
those are
reason
the
to
biggest,
move.
biggest winners in the last 2 years. People with sub 3 mortgages, biggest
I mean,
financial winners.
it's not because I'm smart. It's just because I wanted to move. That's all. I mean, it just happened to happen. It was just a life change. But the point is that because there's a lot of people that are locked into their homes because of good financing, we're not selling anytime soon. So that actually creates an opportunity for the big home builders to maybe increase their new single family home starts. And as to Greg's point, there is a shortage of housing in this country. We're still growing. We're still bringing in more immigration, and we're still, as a country, there's plenty of people that are leaving high school and college and becoming young adults that they need to buy a home or find a place to live at some point. So, and
So-
we
so-
underbuilt housing for 8 years from 2008 to 2015, 16 timeframe. So there's a lot of catching up to do too in the housing sector.
So just a quick,
Hey, one more thing on the home center business, Matt. I mean, I had a couple guys tell me this morning that it still is kind of like above trend in their expectations, and it's that's a real positive for them.
Yeah, we can't keep up. We just can't.
Yeah.
We can't catch up to what they want, and if we could, we'd be having records, but we just can't.
Yeah. So I mean, that supports your whole your theory of the lot of people that are staying in their home and but doing.
So I got a question: that why are some of the big home centers reporting less business on public things? Is it just lumber that's busy at the home centers?
I guess. I don't know. I mean, honestly, I couldn't tell you, Ash. There is a push from the home centers to go after some of the pro business, but that's not necessarily the same type of lumber, right? I mean,
Okay.
the pro dealer doesn't
Yeah.
necessarily need premium, studs. They can use regular studs. So I don't know. There's lots of moving pieces there, but they forecasted an increase in business this year, and so far that's coming true.
So if I hearken back to when we were talking a year ago, I would say 9 months ago, and we were sitting there, and Greg, you were saying, hey, look for the market in 2023 to finish starts somewhere around 1.2 to 1.4 or something like that. We can go back. I mean, you pretty much right on. That was in a market that was a lot of people are like, there's no way. That was not a popular opinion to have. So what back then made you think about that, come up with that, and what do you think going forward?
Well, I put my right hand on my right cheek, my left hand on my left cheek, and no, I was looking at reversion to mean, and just the adjustment, and I think we're gonna be settled in this year in that like 1,000,003 something range. We'll be down some from last year. My second half, I think there's there's good business in the pipeline for the second quarter and maybe as we trend into the third quarter. Beyond that, what happens over the next several months with relation to interest rates, fiscal policy, monetary policy is going to be a big determinant of what that second half number looks like. If there is some stabilization, then it's probably going to be a little bit better. And if there's further deterioration and things, get further out of control, it may not be as good. But we're not going back to 2008. That's kind of my mantra.
Yeah, I agree with that.
The floor is way higher because we're not overbuilt.
Right.
And the pent up demand for housing exists.
Hey, so one quick question. We haven't talked about this in like 6 or 7 of our shows. Are the BlackRocks of the world or these other companies, are they still buying homes, or have they started selling them, or have they backed off? We haven't seen many statistics on the large chunks of homes being sold to invest in large investing companies.
They're not selling from their existing inventory at this point. That from what I can see, it appears is that they're adding, but probably at a slower rate.
I keep hearing about the build to rent thing. So I don't think that's going away as a business model, especially with rents being as high as they are. I mean, yeah, I think that is a permanent change in the home industry.
Yeah, so I mean, I think we'll kind of put bookends on this. I think what we're seeing is adequate production right now to keep up with current demand. That could potentially change. Greg, you said you see a range between 300 and 500 on a CME base. Now, I think we got to also adjust that for the new contract, right? To say, or you're saying because that's a whole different kettle of fish. That's a different number we got to start talking about, right? Isn't that delivered to Chicago? So we got to add 110. So do you see it trading at like 410 to 610 based on the new contract, or would that be fair to say that?
Probably somewhere in the mid to low 400s delivered to the mid high 500s to low 600s delivered.
Yeah, and like you said, when it gets down to those lower ends of the level, it doesn't make a lot of sense to be running some production, right? And
we're continuing. I mean, listen, there's continuing production rationalization at these current prices, right? I mean, guys are making less lumber today than they were, it's some point prior to this, based on today's prices.
There's also a long-term,
right?
There's also a long-term change in production, Ash, that has nothing to do with the price of lumber right now. It has more to do with log supply and the cost of logs and the inefficiencies of older sawmills. So there's going to be a loss of production, especially in Canada, based on old mills that aren't very efficient and really expensive logs. And so they're going to shut those down permanently at some point. And they'll reinvest in their younger, more efficient sawmills where they can get logs a little bit cheaper.
I just saw another Texas mill building another mill with 3 mills in Texas, a Southern Pine Mill building another mill in Mississippi. So we're going to just continue to see production or at least capacity come out in the South. I believe
well, when we had Russ on, we know that Southern pine production now represents 50% of North American supply. I mean, we're probably, that. I guess we would figure that that's going to trend more towards 55 or 60 over the next few years.
So I had a call after our show last week. A completely separate investor in their group called me that's not even in this industry that want to start building Southern pine mills, and wanted some information because they must see some certain value down there, right? And they're actually sizing it up and looking at it. And they watch our show every week, right, to find out information about what they see. So reach around, give yourself a little pat in the back. I think that's a good deal.
Great. I like better when I pat my wallet. So they send I'll send you my Venmo.
So Greg, you're
all right, guys. Hey, listen, I'm on the road next week. I'm going to be doing a southeast.
Give us a port update. Euro.
I'm going to bring my little drone with me so I can take pictures because everybody's telling me that there's like more lumber than there's ever been in the world ever at the ports. So I'm gonna confirm.
But you hear the same breath. People say there's less coming. So the people that all have it sitting on the port are telling you they have less coming.
True.
Yeah.
True.
All right, guys.
Appreciate
have a good one.
Take care. See ya.